Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up for this Thursday, and we are now at September 24th. That's September 24th, 2020. I almost got my time and dates mixed up, and it is 5:30 p.m. Central Time. So as we take a look, we're down a little bit in the gold, but it did hold a key moving average at that 1860 level that we were talking about. Silver did a great job of holding key moving averages, and it's well off the lows that you saw, and we'll take a look at that in a minute. Even copper, which probed again into the low 290s, has come back. So the question is, on the first big break that you get down to key moving averages, what did the market do? Well, I think that some of the trade decided, this isn't a bad place to try to build some long positions and see what's going on, or, and it could be an and/or, cover some shorts as a minimum. That's what I think was going on today. Energy markets sideways. We still have the COVID issues. If you were watching today's Senate committee hearings, you saw that the question is, of course, what to do with over $300 billion in unspent funds that Congress did commit against the COVID that aren't being spent. So the question is, can they be released? Here's a problem that everybody has. The senators and the House people are all going to leave for their election campaigns next week. That's it. So they're gone for all purposes until the election comes about. How do you get any of these bills passed that are needed for the airlines, more CARE Act numbers? I don't know. So it's politics going pretty crazy here, and the question is, at the last minute, does it come about? Goldman didn't think so, and today in one of their reports to their clients, they cut growth by 50% because they don't see this coming about. I understand it. So we take a look at gold, and you can see how the market's falling on a weekly chart of closes. This is a weekly chart, down towards the 18-week moving average of closes. That's where I think the market is fighting now for its support level. In gold itself, while it fell, you got a one-day bounce. It doesn't prove very much. When you take a look at the swing lines, you're still in the pattern of lower highs, lower lows. So the pattern is still bearish. When you look at key moving averages, what I had mentioned the past 2 days, I thought the pros would step in and start buying against the 100-day average to see if they can get any traction. Picking bottoms is never a smart move. The question is, how much of a bounce might you get off of it? It didn't just slice through it. It's at least got the past. Let's take a look at this together. Yesterday's low in the market was 1856. The average was 1858.90, so you hit it and you held it. You came down again today, you held it. So now the question is the market going to lay on it and try to go lower, or is it going to find some traction here? Add to this the fact that the Bollinger Band is right there, and that's what I thought was going to happen. Now, it's important to understand today. On the close, you were under the lower Bollinger Band. The day before, and the day before. That's 4 days in a row. It is really rare to get 5 in a row. They can happen. I've seen them go out to 7 and 9, but you can count them in one. In fact, in a year or two, you can count them on one hand. It doesn't happen often. So the odds favor, as you came down to that number, you were going to see some covering, maybe some buying, as the market tries to lift back into the band, and that band comes in right now at 1869, so the market is back over it. 2 days don't prove it's a bottom, but it's a zone to watch. Who's controlling the market in terms of momentum? It's still oversold. So the good thing for the bulls is that it's oversold. For the bears, I don't see people wanting to commit in oversold funds more money on a market that has just dropped down $140 an ounce. So that becomes a bit of a problem too. The gold-silver ratio held, as we know here, the 71 zone, came back up to 80, and now we're starting to see silver, like gold, pay attention to the first challenge. Now, this is yesterday. I had said, and I wrote in my newsletter, watch out, folks, I expect to see money commit at the 100-day average in the silver. You can't argue you didn't get there. You got there in spades, and from that number, you're already $1.30, $1.40 off of that. So a pretty good call. Now, that you're to the right-hand side, the question is what next? So I see some money was committed. I think we'll see in the next few days as we take a look at SLV and other markets and watch the commitment of traders, we'll see that some came out of the market there and some new buying came in, but you're still in a downtrend. And the way that I trade, it's nice when you talk investment ideas that could be a very good spot to come in. But as a trader, other than the market being oversold and hitting some key numbers to cover shorts again, I don't know what's getting traders to buy the market. In the copper, it's the same thing. You know, if you understand the concept of market highs, lows, you've gone from an upper Bollinger Band to a lower one, and the market is stalled out there. Now, if the COVID cases, be it in South Korea, which has seen, in fact, South Korea's consumer sentiment just came out moments ago, and in looking at it, it's fallen back, and that's because their COVID cases in August and September have picked up. We know that Europe's got a real nightmare on their hands as to how many cases are starting to report. I think that the UK had the largest single day, period, of new cases. So this isn't good news. But the question is, what does it mean for the copper market? And copper has been the one resilient metal. It's now stalled. That's the way to look at it. It's not trending. In the platinum market, again, move to the right-hand side of the market today from the Bollinger Band. Let me just show you that. Here's before that. So you had been plunged, oversold, you're getting your bounce into it, but a bounce into it isn't a trend change. So we have an oversold market that is looking for value areas in many of the metals. That's the point that is going on, including the palladium, which hit, again, yesterday, first challenge of its lower Bollinger Band, and you know what I would tell you. From that number, I look for the market to try to hold. Holding is not a trend change, so keep that, please, in the back of everyone's mind as you watch these markets. And in the dollar index, the big question for the dollar, is it going to lock in here and just ride that number? Both numbers that make up the slow stochastic were over 80 today. The day before they were over 80, not the day before. I consider tomorrow super important in the dollar. If it embeds and if the dollar starts just staying with this riding of the Bollinger Band, which is what it's doing, you get 4 days of riding it now, got to keep your eye on that. You could be headed up even higher. A lot of traders didn't think the dollar would get this strong. This is one of the trades that threw them off. And it threw them off not because the economics and the economic pictures in Europe and America didn't point to that. It's because of the resurgence of COVID and the lack of our government to get anything done, in part, but I think it's more COVID than anything else. You know, I sit here and I talk to you about all that's going on in these markets, and it dawns on me, you know, I don't talk to you enough about my charting course. And in my course, it's 6 hours of videos that teaches you swing lines and details, the different moving averages I use, why I use them, and how I use them. All the tricks that I know about the slow stochastics. You don't get them all here, believe me. The Bollinger Band theories I have, there's more of them that you see here as well. How to use window envelopes, which are really standard deviations from the 18-day average, very popular tool. And then how to put it all together on a chart. Now, besides that, you get daily numbers so you can work with the window envelopes and make sure that you're setting your chart up the same way. With the course, if you're not a subscriber to my research already, we give you all aspects of it. If you're already a subscriber, we just won't give you the other parts of it. You're getting it. How do you get the course? It's simple. You go to our website, www.iraepstein.com, under the word education. It's all there for you. Now, you're going to get the charting software. That's included. My research, if you haven't seen it before, that's a $60 value by itself per 30 days. The charting software is $100 a month by itself, and all the videos and all the other parts that we give, it's a great value, and it's under $200. So buy yourself a gift. Learn a little bit about charting, or maybe a real lot. I'm Ira Epstein, www.iraepstein.com, education. Have a good night.